Well, happy Thursday, everybody. Welcome to our webcast on long diagonals or long verticals and diagonals. I'm Connie Hill. Happy to have you join me here today as we get into both of these strategies. I don't know how many of you have been following along with some of the trades that we've been doing in our class, but I think that's one of the best ways for you to learn is to see those example trades, maybe do them in your paper money account and follow along. Today, we're going to follow up on the trade that we did last week, and then I want to get into putting on several new positions for us to monitor. Last week, we went just kind of at a slower pace about talking about a long call diagonal. We're going to put a few more of those on today so that we have that opportunity for the repetition. Now, I am joined in the chat by Barb Armstrong. I'm glad Barb's here. She's a fellow coach and good friend. She's very knowledgeable in all the things we're going to be talking about here today. So as you have questions, feel free to ask. I will keep my eye on the chat. Barb will catch some things maybe I can't quite get to. But we do want to know what your questions are. Now, if you're listening to this on the recording, and I know lots of you do, then when you have questions, go ahead and type them in the comments section in YouTube, because I go back and I review those throughout the day so that you guys get your questions answered here as well. Well, I hope you're following us on X. I'm Connie Hill CS. Barb is Barb Armstrong CS. We'll post educational content out in our X account, so I invite you to follow along. Let's go through our disclosures and get into our agenda for the day. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for information and educational purposes. Don't consider it a recommendation. We will be using the Paper Money software application, which is for educational purposes. It's what you download to your computer. It's the most robust version of Thinkorswim, although the mobile and the web version are very helpful as well, but we'll be using the software today. Investing involves risk, including the loss of principal. One thing that's different in paper money than in your live account is that paper money will not assign a short option early. That can and will happen in a live market situation. All right, may just have one announcement here today, and then we'll talk a little bit about the construction of diagonals and verticals and how they're maybe a little bit different from each other, and do a couple of an example of at least one of each of those here today. And one of the biggest factors in impacting options are the price, time, and volatility, how those can change over a period of time and impact the value of the options that we're using. And of course, we're going to be going through some examples here today. Now, one thing just to kind of start us out with here, if you're new to these strategies, number one, if you're like, I don't even know what a diagonal or vertical is, you might want to start with getting started with options. Cameron May teaches that class. It's on Tuesdays. And he goes through each of the strategies one by one by one. Now, the diagonals actually are not in that course, but the long verticals and most of the other option strategies are the ones that are going to be kind of your bread and butter type strategies. Now, the difference between a long vertical and a diagonal is a vertical, you're using the very same expiration date. Okay, so if it's February or March, whatever it happens to be, they're going to be the same. And in a diagonal, we are going to be using different expirations. And typically, we're going to be, this leg we're going to be selling is going to be shorter dated. That's where theta kicks in really quickly, and we have the time decay. And on the vertical, there'll be that same month, same expiration, different strikes, and then different strikes in different months on the diagonals. All right, we'll put a few of those together so you get really comfortable. Future Dividend says, I'm super new to options trading a smaller account as well. Hopefully you can be a little bit slower than normal. Well, tell you what, if there's some things that you don't happen to catch, we're going to post that recording when the class is over, so you can go back and review it. Sometimes you need to. This is a more advanced level class. All right, and that's why I point out if you're very new to options, you might want to consider doing the option strategies, but I'd love to have you stay here, catch what you can, and I'll try not to be too difficult on you. All right, somebody did have a question from a previous class, a different class, actually Straddles and Strangles class, option 66, was wondering about that particular trade. We will review that on Monday. Okay, I don't have time to go through the details with it for you today on that Wells Fargo trade, but we will get into the details of that on Monday in our class. So just wanted to recognize that question there. All right, let's do one thing real quick. We'll do our announcement first, which is I hope you guys, when you can, are taking advantage of our experiences, our live events that we have available to you. Okay, we're going to commence a live, or learn rather, here to our Schwab coaching page. Look at this pretty design here. You got to see all our little mugs all at once here. Learn about what coaching does for you. But I want to come over here to the in-person events. We're going to just say view the calendar. Now we have a lot of events scheduled. They're concentrated typically in where we have a large Schwab clientele base. Okay. So if you live in Lehi, Utah, like I do, or Salt Lake, like Barb does, we're probably not going to come to your area. Okay. So find something that maybe you want to go visit or is fairly close and easier for you to get to, because we're probably not going to go to your exact hometown. Okay. But as you see these events, come out here and see. If you're in Sacramento, we haven't been there for several months. So that might be a good opportunity. Same in Bellevue, haven't been there for several months. San Diego, Atlanta, we've been there recently. Denver, we haven't been there for a little bit. And Denver's probably the closest one for some people on the west, kind of the west area like we are here in Utah, okay? So find these in advance. If you're interested, sign up, because they fill up and we cannot invite everybody to come. Now, somebody would love us to come to Myrtle Beach. Ooh, Barb and I would like to go to Myrtle Beach on that one. That would be great, okay? But just know they're free for you as a Schwab client. And we treat you really good, man. We feed you good, we pay your parking. And so take advantage of those opportunities. All right, let's go over to my Thinkorswim. And as we head over here, we're going to talk about a trade we did last week. Now, I want to see what the markets are doing here right now, up 0.61%. We've had a few volatile days here, haven't we? We had the huge drop down day. I think that was on Monday, or rather Tuesday. And then a lot of price action going the opposite direction yesterday after we got word from the president that, oh, we're really not going to put all those tariffs on Europeans. And, oh, okay, we're not really going to avoid Greenland. Right, that really spurred the market on. We're not going to do these things that have been discussed. So a little bit of follow through here today. Nice gap up. It sold off for a little bit, but now it looks like it's back pretty close to where it opened this morning. If we look at the VIX volatility index, well, let's get the right VIX there. Let me zoom out on this one for sure. We can see we were up here in those pullback periods. The VIX really popped up. What you should have noticed is that there were probably a lot more put buying than call buying. People maybe focusing things maybe a little bit defensively or bearishly to take advantage maybe of some of those short-term opportunities. But down here now at 1576, so I wouldn't call it incredibly high. I would say it's getting back into these lower areas where it has been. Yeah, Riceburg, you guys man, you would love to do an investing cruise. Wouldn't that be a riot? Yeah, we would love to go to some of these places. Oh, Paul would love us to come to Buffalo or Rochester. Those are nice places to visit. Oh, we come to Florida quite a bit. Mega, we have not been to Hawaii in a real long time. It's probably been, oh, I don't want to know, say how many years, but it's probably been a long time. That would be a nice place for us to go. And they didn't put me in charge of picking these places. However, I think those are all fabulous ideas. If one doesn't come to you, find something that where you want to go visit and just have a nice little trip and experience there. Okay. Sandeep says, please come to Portland. Probably the closest we're going to get is in Washington in that Bellevue area. Okay, I want to show you our trade from last week. We did Morgan Stanley. We were doing a long call diagonal and want to get you fairly comfortable with this idea. We talked about a long call diagonal is maybe where you, instead of buying the stock and doing a covered call on it, instead of having the stock there, we buy a long option instead and then sell a call against it. So some people call it a poor man's covered call, but it essentially allows you to still participate in that without actually putting all that money into the price of the stock. Now, long option is not the same as the stock. It's not stock ownership. You don't have voting rights and you're not eligible for dividends, right? But it allows us to participate in that. Now, I've diagrammed what our trade was here pretty well. It's been in this nice little channel. They announced their earnings the day that we got in. They had a nice reaction to it. The candle was not quite this high when we got into it. I think it was about maybe here, bouncing off that bottom channel. And then it just had a nice run. And then, of course, like the rest of the markets, it's kind of pulled back to this support area where it's sitting here right now. Now, our short leg of our short dated option is 195. And I kind of put a line out here to kind of keep track. Where is that long option, or where is that short option? Okay, because that's the one we're paying the most attention to here initially. We're expecting the long leg to increase in value, but our short leg, we're using that to kind of help pay down the cost of the long leg because we sell that premium up front, and we're hoping to do it again and again and again. So we're going to hop over here to the monitor tab. Oh, I should have cleaned this up a little bit before we came over here. Let's go. Here's our Morgan Stanley trade. And you're going to notice here, we have our long option for May. And it actually has gone down in value because of that pullback that we had that we just saw in the charts. That one pulled back. You're going to notice here also, oh, we do not have a February option here anymore. It says 0. Why does it say 0? It's because we went and bought it back this morning. Okay. I was noting that we had a good deal of the premium out of that option. We come over here to Morgan Stanley. We sold that option. We brought in 405. It had decreased in value. This morning, it kind of was up a little bit. So we said, you know what, let's go buy it back. Man, we're getting a big chunk of it. Let's go buy it back. And then on this next option that we sell, we're going to leg into it. This one, initially, we did them both at the same time. And so this next leg, we're going to leg into the diagonal. I hope that makes sense to you. When might we do that? Okay, so right now, I would say we'd take our 405 minus the 130. So we've netted there, what, like two, is that like 275 or something? Okay. So when would we consider selling this next option? Okay. Well, what if we allowed the stock to run up here a little bit in value, and we can kind of see where it's petered out before it kind of starts to peter out about the mid-channel area. So what if we allow the stock to hopefully run up to this area? We don't know that it will, but that's what we'd expect it to do, right? And then when it starts to show the first sign of weakness, boom, then that's when we sell the call. It should be a higher value than what it would be if we sold it today. If we sold it today and we got this bounce like we might be expecting, what would happen to the value of that call? Well, it would be getting more expensive. Would that help our position? No, it wouldn't, which is why we're going to consider legging in. Let's see here. All right, just checking the chat here. I guess it was maybe somebody missed some of what I was talking about. Maybe the sound there was a sound disruption. Hopefully not. Please explain when you said you're going to leg into it. I think that will help. Yeah, so this is the legging in piece. We're going to allow, hopefully it will, go up here in value. And we're going to be watching it every day. Okay, this is not a trade we're going to ignore. And we're going to allow that long leg to hopefully recover in value. And then when we start to see some weakness, when it looks like it's starting to run out of gas again, and maybe have a little bit of a pullback, that's when we're going to sell that call. Now, how can we keep track of that? One, we're going to look at the chart every day, is one thing. We could also set an alert, and that alert would say, hey, the price of the stock is in this area. And then we might look at it and see, oh, does it look like now might be a good time to do that? So we're going to set an alert here. And you see where my mouse is? It's kind of in this midpoint of the channel. I'm going to go a little bit above it. I'm just going to do a right mouse click. I'm going to say create alert. It's just going to be on the price of the stock. So we want to know if it gets to 192 and change, let us know, send us a little message. And depending on how you have your alert set up, it can send you an email, it can send you a text, and then it'll also go on your screen, show that alert. All right, so we're going to go ahead, we're going to create that, but we're not going to rely on it solely to let us know we're going to be active and looking back here. So hopefully that makes sense to you about that. Somebody says, well, how about us selling an in-the-money call option to collect the extrinsic if the stock starts to move up, then close out our CC to take the little loss? You could do that if you wanted to. I've explained the logic why we're not going to do that right now, but you certainly could do that, right? The idea here is if we think it's going to bounce, it's probably not the ideal time to sell another call. Okay, so we are going to kind of target this area. Now, say it runs up to the midpoint, doesn't get to our alert, and starts to show signs of pulling back, maybe a weak candle. This is kind of maybe a little resistance area in here about this 188, but starts to slow down at that point, then we'll consider doing it a little bit earlier. Okay. Hopefully that makes sense. All right. What else have we? That's our trade right now. That's the one that we're managing. We're going to put on some additional ones. Now, with the market still being overall a little bit more bullish, we might look for other long call diagonal opportunities. Okay. So let's take a look at a couple I've got lined up for us here. One thing I noticed today, and I hope it's fixed, some of the spreads, bid-ask spreads on a lot of these options were kind of wide this morning. I hope they've shrunk down a little bit to be a little bit more reasonable. If not, we still may just have to work with them being a little bit wide because we only meet once a week. Okay. Akamai. Okay. This little stock, what has it done in the last couple days here? Does it look like maybe it has busted out of maybe this resistance area here? Yeah, today it really looks like it is. Now, it's early in the day, so we're not seeing a ton of extra volume. Last week, we used the ADX to tell us how strong the trend of a stock is. A value of 25 or higher tells us the trend is strong. Now, the trend could either be bullish or bearish. Now, right here, this one's at a 19. So we wouldn't say it's really that strong. However, we still like the look. We're not using ADX in our rules. We're not saying, gee, you must have an ADX of 25 or don't do the trade. But we're just kind of consulting it. And it might feel a little bit more favorable about the trade if it were at a higher ADX level of 25 or higher. But let's take a look at what we have here. Got a nice breakout going on. And that breakout gives us the idea that, okay, we don't know, but we think the stock is likely to go up. So let's go over here to the trade tab. And let's kind of shrink these for just a minute. Now, as we look at the implied volatility here, there's a little bit more in the February options. They're a little bit higher. That might be nice if we could sell that. Now, if this had weeklies, we would consider selling a weekly if we had enough open interest and the spreads were decent. This one these days is not trading in weekly options, okay? So what we're going to do here, we're going to start out with the leg we're going to sell, and we typically want to go a little bit out of the money. You might target a 30-something delta, but maybe sometimes it's in the 20s, okay? Or maybe your only choice is something in the 40s. In this case, we've got a 34 delta on the 105 strike price, so this is the one we're going to sell. I do like this open interest here. Love to see lots of contracts. we don't want to be the only one trading these contracts. We want other people to exchange with, okay? So put it in here in the system. What we're going to do is we're going to do a right mouse click on the option we want to sell. So that's going to be this 105. And then the overall here, we're going to be buying something. We're going to be buying a position. So we're going to say buy, and then we're going to come up here and do diagonal. Now, Thinkorswim doesn't know, the platform doesn't know which strike we want to pick to go long on, okay? So it just picks the next month out, which is March. We're actually going to come out to May. So I'm going to open May here. And in terms of considering, well, which one do we want to sell? Oh, you know what? Let me come back here. I take this back. No, we're good. We're good. In terms of the one that we want to go longer dated on, and we're going to be maybe slightly in the money or at the money. Okay. At the money here looks like it would be, man, it's almost right between the 95 and the 100 here at 97.32. I'm going to go with the one that has the 61 delta. We'll go with the one that has a little bit more intrinsic value on it. Okay. Although if you were happy with the 100, you could do the 100. We're going to go with the 95 here. Okay. So we're going to come out here to the long leg, which is the one on top. We're going to change that March out to May. And then we're going to change this 110. And we're going to do the 95 here. Okay. So we're using kind of all the data here to put together our trade. And then that's going to give us a net debit of $7.85. Now, paying $7.85 for this $11, almost $12 option, that's kind of nice, isn't it? We're not necessarily paying the full value because we're selling that upfront option. And our plan with this is we're going to watch it. Let me go ahead and submit it. We're just going to do the one contract here. We'll hit confirm and send, and I like to put this in our class bucket, long verticals and diagonals. We're going to send that off. And then we're going to watch it. We're going to do kind of like we did with Morgan Stanley. We're going to see if it runs up for a bit and when it starts to show weakness. And when it starts to show weakness or look like it's going to pull back, we're going to allow it to do so. We're going to be happy campers about that. But maybe then if it falls down, it comes back to maybe a support area, or it looks like it's starting to gain strength, kind of like we did on Morgan Stanley, then our plan is to buy it back and not necessarily try to make sure that it bleeds out every penny out of that short option. It's really hard to get that, and sometimes isn't the wisest strategy. So we're going to look to get a chunk out when the technicals look appropriate, right? When after it's run up, it's pulled back, maybe it's looking like it's getting ready to bounce here. We just sold on that one. We brought in the neighborhood, let's just round it to $3. So if we brought in $3 and say it's down there at $1.50 or $1.25 or even $1, yeah, we might be satisfied to say, great, let's go buy it back. Let's let the stock run up again, and we'll leg into another short call on that. All right, let's see here. We need a good name for this folder. You don't like the name that I gave it? You don't like long verticals and diagonals class? You could come up with a snazzy name. If you want to submit a snazzy name, I will consider it. Okay. Now, the intent here is that we want to do this multiple times. We don't want to just sell one call. We want to sell multiple calls, one after another, okay? I'd like to do another trade here with you. Let's pull up this stock here. And I want you to know the intent here is probably with this trade, I want to tell you that as well. We'll probably need to be holding it over earnings. It's not for an earnings trade necessarily, okay? But earnings are out here in about a month on the 19th of February. We still might be in the trade at the time, but I'm not trying to start up trades if they have an earnings that it's really close. Okay, so now this next stock, let's take a look at this guy. GE Aerospace had its earnings today. Did the market like what they had to say? I guess not, right? Because it's down. Man, it is down a lot. And can you see how it just broke through this support level? If we draw this in maybe about, it might be somewhere in there, breaking through that support level. Would we look maybe more bearish or more bullish here? Well, we're going to look for something bearish here, okay? And let's point out on this ADX, the ADX is rising, but it's still at a low value, 18. Sometimes when stocks are maybe changing trend, they might not have a strong ADX number at the time because it's just barely kind of starting that trend. So it's starting to go up, starting to let us know that it's getting stronger. Again, it's not a criteria for getting in or using the stock, but we're going to do a long put vertical here, okay? Switching strategies a little bit. I told you I wanted to give you an example of each of these. So as we come over here to the trade tab, we can see it does have some weeklies. And it's traded over 5 million shares today, so super liquid stock. We love to see that, okay? On this one, let's see. We're going to use, on this, we're going to do the February 20 options. And, I looked at doing a couple of things here. Stock is at 297.15. And so many times we'll start along vertical. We'll start kind of at an at the money position, but you don't have to start at the money. I had pegged for us to do, and we'll see if this still makes sense, 302.50 and 300. Which right now, both of those look like they have intrinsic value. It's dropped enough. I think I'm going to need to shift. I think we're going to need to shift to 300, 295 here. Okay. So we'll say buy vertical here. It's a $5 wide spread. What do we need the stock to do? We need it to drop an additional, we need it to drop past 295. Okay. Halfway there, right? Where's 295? Oh, look, it's just a little bit where my mouse is. Is that a big move? It's really not that big of a move, is it? That we would need it to make. Now, on a $5 wide spread, our cost in this trade is going to be 220, and it's going to give us the opportunity to make what? It's going to give us the opportunity to make 280. So a little bit more on the big return side, but yet we're not needing the stock to move a whole lot at the point that it is right now, okay? We can, and we'll do on this one, let's position size it to the point that we say, all right, we could risk $1,500 on this trade. If we risk $1,500 in this trade, how many contracts could we do here? Let's grab our handy dandy calculator, drag it over here. All right, so if we say, oh, it's floating around a little on us now. I'm going to take it back. So let's go to 225 here. So if we have our 5 minus 225, that gives us 275 as a max theoretical gain. Okay. And if we divide that out, it's over 100% return, right? So aggressive return, but actually not looking for that big of a move on the stock at this point, okay? If our risk is 225, let me just write our 275 number down there. And if our risk is 1,500 that we're willing to risk in any trade, let's divide that by our 225. We can do 6 contracts. Oh, look at that, the big 666. We're just going to do 6 contracts here. And then we're going to put in an order to buy this back when we get a chunk of it. Okay, we're not going to say we've got to get all of it. It's really not realistic to do that because you still have your bid-ask spreads, and sometimes it's really hard to get all of that time value out of there. And that's why we say if we get a chunk of it, let's be happy campers with it. Okay, so if we say 275 is our max theoretical gain, what percentage might you be happy with? What percentage would you feel good about? If we got 50% this week, we'd be thrilled because the week's almost over. Or if we got it maybe say in 3 or 4 days, yeah, we might be happy with that. But we're going to go ahead and plug in on this one. Let's say if we get 75% of it, okay? If we multiply 275 by 0.75, let me think here. We get 75% of that. Yeah, that would be $2.06. So to the $2.06, let's add our 225 because that's the net debit we would want to buy it back for. Okay. We're going to do first trigger sequential. We'll put in our opposite order. We're going to put in that value there. What did that end up being here? 431. Oops. Stick it in here. 431. And we're going to make it a GTC. All right. Let's go ahead. Let's throw it in the boring account of long verticals and diagonals class. Again, you can send me a jazzier name, and I would consider changing it. And let's send it over. Now, the plan here is if it executes for us, great, we'll be happy. Okay. But this is a trade. We've got 29 days, so we're going to watch it. We don't plan to be in it 29 days. Okay. When we get a big chunk of it, we're going to move on our merry way. Let's suppose this stock runs down. Where might it fall to? Okay. You know, in this area where I'm drawing this horizontal line seems to be possibly that 291-ish area. Could be a support area. So maybe it only drops about $6-ish to that area. That could be. Maybe it comes down here and just kind of hangs around. Time can be decaying in our favor. We'll be happy about that for the value of that it adds to our spread. And if it maybe comes back and violates this area that it should now act as resistance, technically would consider getting out. Would say, the trend is changing. It's not staying as weak as it was. We've got a lot of selling activity going on here today. But if it violated that, yeah, would consider getting out early. Okay. Let's say there's some gaps in there. Chris says, we could talk a little bit why the bearish makes sense to you on this. The stock is down today, but on earnings, but the market is bullish and the stock has been bullish. The stock has been bullish through this period of time. It has been. It started to become a little bit more sideways through here. And then in the last couple of days, especially today, dropping. If I were to draw some lines on here, it might be starting a channel, kind of like that, although actually dropping down through the channel. So the 10-day period moving average is headed down. So that's the short-term trend. The intermediate, I've got a 30 here, is just starting to flatten out. But visually with our eyes, can we see? Let's use this one here. Can we see the lower lows and lower highs? Okay, so we have this high point here. Oh, my tool doesn't want to draw here. I hate it when it does that. It only wants to draw on the other screen. Okay, let's use this instead. Can you see here? Here's our peak. There's a lower high here. It'll draw on here. Oh, another lower high here. And an equal low with this red one. That it was an equal low and today's a lower low. So we have two lower highs and now a lower low to go with it. So that's why we're going to look bearishly at this. Now, if you're not comfortable with something like that, don't do it. I don't feel like it's counter trend by any means. I think it's early in the trend and that they're just getting whacked today. Even though the market might be bullish, we're still going to see pockets of weakness. We're still going to see stocks that are struggling, that don't meet their numbers, that even though the overall market might be going up, it might not take that stock with it. Okay, so that's my rationale. Let's see. This is straight gold. What is straight gold? I don't know about that. Okay, did we get all the questions answered here? No, there's another question here. The stock is already in the money. Wouldn't that mean that you'll be missing some of the gain? The strike price that we were looking at, we changed it. Maybe you mentioned that at the time when I said this is what I was originally thinking. What I initially was thinking, we were going to do a 302.50, 300, and only have a $2.50 wide spread. But I adjusted it because the price of the stock had adjusted enough from the time when I had picked those strikes, but to say, let's do these other two. Okay. All right. I think we're up to date. Now, I'm going to answer a question that somebody has posed. They wanted me to answer a question here, and I want you guys to think about this. The question was, when is it best to take a max loss? Now, this could be true with any kind of a trade, right? When is it best to take a max loss? Well, a max loss means it can't get any worse, right? It's like, yeah, we're losing as much money on that trade as we possibly can, which is never a good scenario. We would like to not have that happen. There can be changes that can be made to trades if it looks like they change their tune, that the trend changes on you. Then some of these trades we can alter. But you have to be convinced that, man, it's changed on you. The leopard has different spots. It was bullish, now it's bearish, or vice versa, whatever the case may be, that the trend has really changed on you and that the trade that you're in doesn't make sense. That's when you might try to change it. There are going to be some situations, though, where maybe you're looking at a max loss on something and you go out, let's say a volatile activity has happened and the spreads get really wide. And you're like, man, if I get out now with these wide spreads, I'm worse than my max theoretical loss. Then we don't have to unwind the trade at that point. We can hold on till it expires at the worst point it is. We don't need to have more of a max loss than what theoretically would happen to us on options expiration. Okay. So when is it best to take a max loss? I'm just going to say probably not very often. Okay, we really don't want to have the worst option scenario come to us. All right, very good. One other tangent. We answered that question. That's a little bit of a tangent. Another tangent I'm going to take us to is back to here. Hope you guys have become Trader Talk subscribers to our channel. Makes it so easy to find our content. You can see our playlists. You can see what's coming up during the day. Here's our upcoming live stream. So we're in our class here. Cameron May is going to be up next at the top of the hour with investing in dividend stocks. Kind of see basically the agenda for the day is really helpful to be able to see here. If you need to be notified, if you want a message to come to your email, your text, or whatever, and you want to be notified, you can do it there. Another thing I want to introduce you to, and Barb and I have a lot of content out in this area, is what we call bite-sized content. And these are small videos that explain something in a short period of time. But it takes a little bit more than like 2 minutes, and so they have to be 10 minutes or less. Now, Barb did one last week and she's doing a really nice series here on candlestick patterns. And question came up in a class yesterday about somebody said, who's teaching the class on the candlestick patterns? And there's not just one class for it, but Barb has this series of explaining what some of these dominant and prominent candlestick patterns are. So you might want to check that out. I put one on, and this one's just brand new today, that says that let charts find custom candle patterns, meaning the charts can find candle patterns for you. Not only regular candle patterns, but a candle pattern you decide. And I show you how to do it by creating a Kahoot pattern so that you can have it show up in your charts. Okay, so some of the things, kind of the extra things that you see, as well as just directly finding our content so much more easily. All right, so if you haven't subscribed, hit that little button. Looks like YouTube and a blue icon says subscribe in the bottom right of your corner of your screen. All right, you up for one more trade here? I think we have time for one more trade. We will not take a lot of time going through it, but we're going to set it up and follow it. All right, Gilead Sciences. Are they having a breakout day here today or what? Yeah, I don't know what their news is. I didn't look up the news. Sometimes you might want to know what's happening, what people are so excited about, right? But a nice breakout can be a bullish entry for some people if you like to trade breakouts. Now, some people do, some people don't. I don't mind a nice breakout trade. There's a lot of things we could take a trade on, right? And a breakout is just one of them. It's early in the day, so we don't really know how much that volume is, if that's good volume or not good volume, but nonetheless, we're going to use this as an opportunity. We're going to structure another long call diagonal here. Now, one thing I do want to note here is many times with diagonal trades, you're not looking, although changing strike prices can change that, but sometimes you're looking for just maybe a little bit of a move and not a huge move, okay? Depending on how you structure it. Now, on Gilead, they've traded over 3 million shares today. They have some weeklies. On this one, we are going to use the February 20s here, though. And we're going to start with the leg we're going to sell. And so typically, we're going to go a little bit out of the money. We mentioned earlier, maybe you could use a 30-something or a 40-something delta. Let's see if this is still looking decent. I was looking at the 136 here. Yeah, let's go ahead with the 136. It's a 39 delta. And so this is the one that we're going to sell, right? Mouse click, buy, diagonal. Doesn't know which one we want to buy, right? It just puts the date further out and the strike further out. And then we go and fine tune it. Well, the leg that we're going to use, we're going to come out here to May as well. All right. We want a lot of time because we are hoping to sell lots and lots of calls against that long diagonal and be making our net debit lower and lower and lower. All right. So we're going to come out here to May. Stock's at 132 right now. So let's go with our 130. That's going to be our kind of splitting between the two, but that's going to be our first slightly in the money option here. So we're going to do the 130 even out in May. Okay, so we're going to change this to come out here to May. And then we're going to change this to the strike price we're interested in, which is 130. Okay, so we're going to do a 130, 136 diagonal. Notice the net debit's quite a bit lower here. Instead of 990, we're getting in at 650 because we've sold that February option, brought that premium into our account. So it's going to do one contract here. We're going to send it to our boring bucket called long verticals and diagonals. And we're going to keep track of this as well. So we've got 3 long call diagonals that we're going to keep track of them. And I wanted to just give you a little variety, which is why we did the long put vertical on GE on that stock's weakness and on the trend change, okay, is what we've got going on there. Let's see, somebody wanted to see a risk profile graph. We'll do it super speedy here. It's not on GE, it's on Gilead. Let's come over here to analyze risk profile. Here's Gilead. We'll say hide simulations, just so positions. And we've got to change a date out there. We're going to take it to the furthest date out, which is going to be the May date. And then we'd set strikes to break even. And we're going to have to adjust our graph here. What is going on? Let's see. Not sure why it's being a little bit weird here. Let's see. I'm not sure why it's not coming out here and diagramming that for us. I'll need to take a closer look at that and see what's going on. In any case, my time is up. All right. If it would have flooded in there, we could have looked at that lickety split. Maybe it's, oh, maybe it's we're not filled yet. Not sure. That was my guess. I don't know if that's true or not. All right. Another time, we will look at those risk profiles we did in our last class if you want to see that Morgan Stanley risk profile. Well, you guys, we've had a fantastic class today. Appreciate your participation. Love the questions you're asking. And if you want to learn this strategy better, you could do it in your own paper money account. That's the way we learn things the best. So follow us on X, subscribe to our Trader Talks channel. This was a good session for you today. Hit the like button on your way out. Barb, thank you for your help here today. And thank you to each one of you. We'll see you back at the top of the hour. Cameron May will be there with investing in dividend stocks. See you soon.